Very good morning. It is Monday 30th of April, so I hope everyone had a great weekend. Quick overview of what we're going to cover. Quick look at some M&A news from the weekend. About Sainsbury's, their shares up 20% this morning. So we'll have a bit of a review about what's happened there and the reason for that strength in their stock price. We'll also have a look at some other things. Brexit, there's been a bit of an update. Just Theresa May's got another fantastic Monday morning to kick off a fresh week of Conservative leadership. And then we'll have a look at a few other things. There's been some Chinese data overnight, albeit do keep in mind that Japan and China are subject to market holidays this week. So just to clear that off, it's Golden Week, which means Japan is shut today, Thursday and Friday, and the Chinese markets are actually closed today and tomorrow. And then we'll look at the day and week ahead in terms of the calendar events. Quick look at the charts though this morning. I guess one thing, just having a look now, cable just touching on fresh lows. And so we're just retesting the lower bound, I guess, of last week, that being that 37.79 here in the futures. I was just looking at that on a slightly longer dated. This is a daily chart, and obviously Sam will come on and talk about this a little bit more in a second, more technically, but we're just having a look at some of these areas of support and kind of consolidation of price action that we had at the beginning of March as the pounds continue to remain under pressure. Again, this comes after we've seen quite a substantial drop in inflation conditions in the UK, pick up in wages. We've also had the dollar coming back as US yields have breached 3%. Then we've had dovish Mark Carney, and the bets for then as a consequence of this, a May interest rate hike have fallen substantially, and we saw that play out last week where we saw the odds drop to about 25% now, given the GDP miss that we had. So beyond this point of 37.72 here on the dailies, the next real key area, I think, we'll see whether Sam agrees, is kind of this zone down at the 37 handle. That's the one to be watching with more interest, that being the actual low that we had in March, but also the high point that we printed back in September of last year. That's quite a critical area of support, I'd say, for the price action. So I'd be interested to see if we can breach these levels and retest of last week's low where we are at the moment, and we continue to trickle lower. That's an area of interest for the week that I'll be watching with some interest. But looking elsewhere, and the other assets, the dollar index is up marginally, so it hasn't really influenced too much the euro-dollar pair. That's found some support of pivot thus far, but gold's down about $5. But I guess this might need some perspective. I guess we've been trending lower now in gold throughout the course of the last week or so. So again, keeping an eye on the range low of what would have been the end of last week. So just testing around S1 this morning, but that 13.15. And then the equity markets, slight positive this morning. And that will lead us on then to a discussion about the FTSE, because if you look at the FTSE on the CFD, kind of gapped up a little bit this morning, and one of the individual movers, of course, is being in the retail sector, or supermarket, I should say, because this is the headline that you probably saw at the weekend: Sainsbury's to add Asda in a $10 billion deal with Walmart. Of course, the Asda unit is one owned by Walmart. And a couple of things to just be aware of with this single stock kind of transaction, if it does go through, just to be aware of. And this is kind of the interesting graphic here, because a combination of Sainsbury's and Asda combined would give that entity a market share in the supermarket space of 31.4%. Tesco's is by far the largest, as it currently stands at 27.6%. So the combined company would be larger than, in fact, Tesco. And this obviously has raised some eyebrows about regulators. Could they stand in the way of the deal being done? But a couple of interesting points here to just clarify with this deal. It seemed, so putting the two together will vault them above Tesco's. It's also enhanced their ability to compete with German discounters Aldi and Lidl. Don't forget, those particular names have really seen quite spectacular growth in comparison to the other more, let's say, matured names that have been in the market for many, many years, just given the fact that they base themselves down at the discount end of the market and that really has thrived in the conditions of what has been very much so post-recessionary, and only up to the recent times have we seen this improvement in wages and drop off in inflation. But it has been in the last kind of 18 months, 2 years, certainly since the EU referendum, quite a squeeze on the consumer, and that has reflected in the likes of Aldi and Lidl outperforming. We've also had Tesco very strong, and of course Amazon now has become a prevalent player in the online space. But a couple of things here, and why this deal is quite interesting, and why Sainsbury shares have responded so well to this news, is that Asda is a very big player in the non-food market. But they're very bad online, which is the complete opposite of Sainsbury's, who of course owns Argos. Now, I don't know if you've been to Argos lately, but it doesn't look like the Argos I used to go to when I was a kid. It looks completely different these days, much more modern in its design and approach now. But this is what's seen as quite complementary in terms of what they're very good at is the other company's weakness in that sense. The geography is also seen as quite complementary in this deal, because if you think about it, Sainsbury's is very prevalent in the south, whereas Asda is more dominant in the north. However, as well, the two businesses have different customer bases. Now, some might say, well, how do you combine this then? You've kind of got Asda, which would be more kind of on the discount side, Sainsbury's, let's say, more on the premium side. How can these two brands sit together? Well, the actual thing is, and what's being discussed at the moment, is they're going to continue to sit as two completely different companies. So they'll preserve their two brands rather than operate under a single company. Excuse me? Just having a look. Other things to be aware of, there's already been calls from the competition probe, given the tie-up would result in this merged operator controlling a third of the grocery market. So, you know, when an M&A deal gets announced, I mean, like with this deal, this does not mean that this deal is going to go through at this point. They've tabled it, but it's likely to be subject to review now by the Competition and Market Authority, the CMA. So we'll see how this plays out, but certainly there's been a pretty sizable moves in the market this morning. If you start looking at the FTSE here, this is a breakdown of the gainers and the losers. Sainsbury's are up, have been up about 20%. Who's the biggest casualty, or who do you think? Tesco, of course. Tesco are down, have been down about 3 to 4% this morning. Morrison's down, second biggest loser in the FTSE. So interesting to see the reaction of this. WPP, Martin Sorrell will be sat at home, kind of not particularly happy because he's gone, and the shares were up 9% after their earnings this morning were very strong. So yeah, hopefully that just makes a bit more sense about this deal and why Sainsbury's has been so positive this morning. Another big one, of course, on the M&A space. This, forget Sainsbury's, this is much bigger. T-Mobile and Sprint agree an all-stock merger, combination of the third and fourth biggest US wireless carriers. But again, this could face regulatory hurdles because otherwise they've pretty much got the whole entire market locked up if this was to go ahead. So large deal though. In numbers, T-Mobile and Sprint have clinched a deal valuing the combined company would be about $150 billion. So something to also keep an eye on. Okay, moving on. Some other things to be aware of from the news side of things, and Theresa May robbed of a Brexit ally in the fourth resignation in 6 months. I'm sure you've probably saw this news came out last night. Theresa May losing another pro-European ally with the resignation of the Home Secretary, Amber Rudd. And this, of course, being very pivotal because we're getting close to kind of the more crux point of the Brexit negotiations, particularly this key issue of the customs union, which it appears May is under quite considerable pressure to keep the same path, if you like, that she's tabled since the actual snap election we had last year, in that we're going to exit the EU's customs union. So Rudd leaving does open the prospect potentially of erring on the side again of a more harder Brexit, and potentially you've got a little bit of underperformance in the pound this morning. That news coming, I guess, in the wake of what has been a weakening pound as May hike prospects have fallen. It's kind of all fit within the same narrative, I guess. So worth just keeping an eye. The other thing, of course, this leads us into is the London elections, which are happening, I believe it's this week, actually. Thursday, yes. So voters in London expected to punish Theresa May's Conservative Party at local government elections this week, which could embolden critics of her Brexit strategy, but not expected to trigger her downfall. Now, one of the things here is that London, of course, is very much a Labour area. If you take the city in its entirety, the latest YouGov polls put Labour ahead by 22 percentage points over the Conservatives, putting Labour on course for its best performance in the capital for 40 years. So quite interested to see. I would say the fact that May managed to deliver the first kind of phase, if you like, of securing a transitional deal has averted direct danger. If she hadn't secured that, I was kind of looking for this May sentiment to play out, and that would be her gone. That hasn't happened so far. She managed to secure that, so she's managed to hang on so far, but with Amber Rudd now gone, she's kind of running out of backers at the moment. So it'd be interesting to see how those results play out. We'll be looking for those on Monday morning. Could be something, I guess, could weigh short-term Monday morning on sterling sentiment if the Conservatives had a particularly weak performance. But we'll see. Again, Labour expected a very clear margin for the London area. Okay, looking at the calendar for the week ahead, quick word on the Federal Reserve. They, of course, have their interest rate meeting on Wednesday. I would say not really expecting too much here. As you all know, quite rightly, the Fed not expected or priced by the financial markets to hike interest rates until June. That's the big one. And remember, we've only just had the latest summary of economic projections in March. We've only just hiked rates. And so, generally speaking, June is the one which we're looking at with more interest. So I don't really see too much to come out of Wednesday's event, but obviously will be something to monitor for short-term volatility. The point here being that the Federal Reserve is closing in on its 2% inflation target, but really the language shouldn't really alter too much to deviate from this more gradual approach. So I'll leave it at that. We'll talk more about that on Wednesday. Overnight, just so you're aware, we have had some Chinese data, the PMIs. Nothing greatly exciting, and as I said, the Chinese markets were closed. The one market in the Asia-Pac region, of course, which saw a decent move to the upside, was the South Korean market, just given the new peace deal that was struck with North Korea at the end of last week. But the PMIs in China gauge falls less than expected in April. Things just tracking along relatively nicely there. Looking at the day ahead, we've already had first of the German state CPIs come out, so maybe worth keeping an eye on for inflationary conditions in the Eurozone. The month-to-month was flat. The year-on-year 1.6 against previous 1.5. Hasn't really been too much of a response in the market to the data thus far. But going through the morning, you'll be looking out for the rest of those to come. Next up at 9 o'clock. Then into the afternoon, you've got the core PCE numbers worth keeping an eye on. I guess from a US perspective, generally speaking, the Fed tend to look at these quite closely in terms of the central bankers and their decision making. And then later on this afternoon, you also have Chicago PMI. And of course, throughout the entirety of the week, you need to be keeping an eye on the jobs-related data. Of course, this is the whole week. And the end of the week, Friday, it's that time again, non-farm payrolls. So we'll be looking out for ADP on Wednesday. You've got ISM non-manufacturing on Thursday, ISM manufacturing on Tuesday, and those employment constituents will need to be watched to give you a better indication of the jobs conditions. Again, the unemployment rate, generally speaking, is kind of its lowest rate it's been in since the 1960s. It's not really an issue. I don't really think the job creation figure, the headline change in non-farm payrolls, is either that much of an issue. It's the wage data, of course, the average hourly earnings, which will be looked at most closely. Other things to be aware of for any FX traders: you've got the RBA interest rate decision overnight. You've got Bank of Canada's POLOS, the governor speaking on Tuesday. Other things that are quite interesting, you've got the UK PMIs coming out. That means manufacturing on Tuesday, construction Wednesday, then the big one, services on PMI. Now, I was talking about this quite a lot last week when we had the weak GDP figure. I really feel like this PMI suite of data coming out for the UK will be the nail in the coffin to whether or not we get a May interest rate hike from the Bank of England. The key one, of course, being services, given that our economy highly geared to that area. If that comes out weak, then I think we need to write off May interest rate hike. That coming on the 10th, that decision. And that's pretty much it for the week. One other thing, though, to have a quick look at is obviously we're still in the middle of earnings season. So this is a weekly earnings calendar that I've managed to get. And just quick look at the highlights of some bigger names to be aware of and on which corresponding day. You've got McDonald's, they're due today. And so they'll be coming out pre-market. That's probably the one big one to look out for in pre-market, today's activity. Looking at tomorrow, you've got Pfizer, Merck, so a lot of the pharma type names coming out. Just scanning through the larger cap names. And of course, you've got Apple is the big one. That will come out tomorrow evening. Remember, that's after market. Moving further on, other names, just scanning General Electric this week, State Street, Apache, Express Scripts. So we this is the bulk of the rest generally of the other big earnings coming out. Then going into the latter part of the week, Kellogg, PG&E, and then Friday, Celgene and so on. So I guess McDonald's today, Apple tomorrow is if you're looking at it from a market cap weighting, Merck tomorrow as well is a pretty large name to look out for, as well as GE. Alright, hand you over to Sam then. You can have a look at the charts from a technical perspective. But I wish you all a good day and a good week ahead. Thank you very much.
Hi guys, good morning. Let's have a quick look through the charts and where we sort of stand going into this week. We'll start with the currency. So Euro just had the pivot not long ago and found a bit of a bounce there. Looking at the recent trend of this market, I think I still do prefer to look to go short with this continuation of a bit of dollar strength coming back into play, and I think ideally again from a bit higher up would be the main sort of play here. Of course, if the pivot does break, you can get continuation through there, but a few levels to the downside you'd want to be aware of. You can see this pullback area that we had late on Friday on the futures there, 121.42 I'd be interested in, and then you get down to Friday's lows not too far away from the S1 before we could perhaps open the door again to the upside. Other than the high of the day, you have the area support that we broke down on Thursday evening. This would be quite an interesting point of resistance if we were to continue going higher, and then I would be looking to continue this short. That has been the trend really for last few weeks. Let's see if we can get any trend lines going up here. So yeah, this would be quite nice. You can see we've got the area of support Thursday, so that would offer a good resistance point. We've got this trend line coming down from where we started this down move, and it lines up quite nicely around here, and you could obviously use the previous high of the day as a potential area to take profit for that. It would be quite an interesting trade if we were to get a bit higher. R1 doesn't look too bad either. Another market which we saw make a new low for the day this morning was pound, and you can see here on the futures, well yeah, it touched the low of Friday, one tick below there. So pound is finding a bit of support, as you would expect on the first test of that level. Again, for this market would be favouring the down move to continue. So I'd be looking for either this level from Friday to break, and then you can get a continuation down to the S1, or the safer play, same with the euro, be looking for this market just to come a bit higher up to continue the overall trend. And other than the high of the day and the pullback on Friday, not too far away from the pivot point, it may well be a level that comes into play this week or the week after. But I would keep an eye on this area from Thursday as well. if we were to get back up where we found decent support before we really pushed down on Friday morning into the afternoon. So I think that would be quite a way away if we were to get there. But in terms of levels to the downside for the continuation, you can see, just clear this up a bit, other than the low there we had from the beginning of March. On the 2nd, the 1st of March would be the key level, just above 137 handle on the futures there to be aware of if we were to get continuation. And pretty, from a technical point of view, pretty good level of support back then, so I'd just bear that in mind. You'd have some decent profit taking around there, but a further push through could bring that area into play. The other currencies that we'll have a look at, Aussie dollar before dollar yen, again for this market favouring the downside against a stronger dollar in recent time, starting to just range a bit here. You can see those highs from last week, Thursday, Wednesday and Friday evening. I would still be focusing on that area as a potential point to continue this trend. Above that, the high from last week, marking up quite nicely with the R2. So if we were to get a push through, and bear in mind Aussie dollar's hardly moved that much over the last few trading sessions, I wouldn't expect that to come into play, but again favouring the downside here. If we were to get a breakthrough of and let's just lower the time from down through the S1, push down to this sort of region, and then a retest of Friday's support in the evening and what is the low of the day, I quite like the classic short off that to then target the lows of Friday. So that's a possible opportunity there if we were to get continuation of the recent trend of this market. For all these dollar pairs, obviously I'm talking about going short here, but there is going to be opportunities, as you'll know, to get the long. And I think for Aussie dollar, if we were to break maybe the trend that we've had to the downside this morning, then there's an opportunity to get long to target previous highs, pivots and pullbacks that we've had. But for now, I think to favour the downside is the way forward. Dollar yen, which if we just put this on the 60-minute, you can see just going sideways over the last few trading days. Has been a tricky one to sort of call in the overall direction of this market, because as you can see, just up near where we had pretty choppy price action before around here. So I favour the other dollar pairs really, or perhaps looking to go long a bit lower down. S1 doesn't look too bad because you have the lows that we had on the 25th marking up there, or if we were to get a break really above the high of last week, there will be opportunities. Again, you can see we've had quite a nice trend coming from Friday's lows here. Let's see how well that has been respected. Not too bad there as well, and we have just pushed up a bit higher. Key level to the upside being tested now that we had the pullback there on Friday. So let's see how that holds. It might well be that we come back to the pivot before then pushing through, but definitely preferring the other dollar pairs for now. Move over to oil before we have a look through European equities, as that did have a nice bounce there, as you see from the S1 level today. Not too far away was area of support that we had on the 25th, and even the low of the 25th just a bit below that. In terms of where we can sort of push on, I know a couple of people were looking to get long here. You have the low of the morning, 67.41 would be an obvious sort of profit target there, where we found support that now turning to resistance. S1 today that we broke through with Friday's low as well could be an interesting final target for this market. Overall, in the grand scheme of things, oil still is up. I still do prefer perhaps the upside overall, but we are starting to get another test of these lows, and if that happens, it could well be that $70 is put on hold for a while. Having a look over, we'll start with the DAX and then come over to the FTSE. So we've just had the open there. Gapped high, already filled the gap and already starting to go sideways a bit. Friday's high, key level to the upside. The pivot with Friday evening's lows, not the worst level either, to sort of contain this range for now. I think a break through the pivot would open the door, and you could get a decent sort of risk reward trade down to the levels of support that we saw on Friday. S1 in the mix there as well for this market, but one I guess to keep an eye on in this morning session. As Ant mentioned, FTSE just pushing on. Highest we've been here for quite some time, and if I just make this chart just a bit longer dated, you can see we're now, well, percentage wise, let's just get that a rough sort of guess. Yeah, 3.7% away from the all-time high for the FTSE. Helped obviously, of course, by the weaker pound, and I would favour the upside for the FTSE here as well. I think if we can get pulled back maybe to Friday's high, in the sort of the midday high there, you've got 74.94 on the CFD. That would be a nice opportunity to get that push higher on, as we did find good resistance there initially on Friday at midday. US equities, if we just put this on a 240-minute chart, it's looking at this, it's quite hard to really get an overall direction of what's going on. It's more than likely is this in this consolidation period, and the overall direction will change on a weekly basis. So not my sort of favourite market, I guess, to really have a trend following trade, but interesting levels nonetheless around the pivot. You've got S1 and yesterday's low to the downside. If we were to push on from a range perspective, the high that we had here on the 24, not that far away from R2. Where we're trading now, I think you'd want to obviously get a confirmed break really above the high of the day before really being interested in this market, but not really the go-to market for now anyway, and I think better off to wait for the afternoon in that respect. You've got a decent opportunity perhaps later on around the pivot with the lows from Friday and Thursday marking up quite nicely as well. Similar sort of picture really for the Nasdaq and the Dow, in that we're in this consolidation period, and in terms of choosing overall direction, it's going to be quite tricky, I would say. Gold, just to wrap it, and then we'll have a quick look back to see if the currencies have moved since, but S1 for now holding for gold, having this decent push through and to the upside. Same with those sort of areas, if you like, for oil. What was an area of support, these could obviously be targets for that push through. S1 holding, but the lower the time frame down here, you can see we've had 1, 2, 3, 4, 5 tests on that 5 minutes, so strong area, but you've got to imagine another test of the low of the day and it will open the door up, and then Friday's low, so yesterday's trading session low, not too far away as well. So keep an eye on the dollar going forward for this market, and the dollar pairs as well. Euro, that pivot holding quite strongly on the first test, and that's helped just bring the pound up as well from yesterday's low. But I would expect at some point the low of Friday to go there in the pound. So just to reiterate, dollar pairs, Euro, Aussie and cable preferring to look to go short, ideally from higher up. Dollar yen a bit less short. Oil, keep an eye on those lows. There you go, so decent pop from that pop push higher from the S1 and breaking through what was the previous level of resistance. Any questions, as usual, please do get them in the chat, and we'll catch up with you guys throughout the day. But if I don't speak to you, hope you have a good trading week.